How many Bitcoin do I actually need to retire? Do I maybe need way less than I think or way more than I think? What actually happens when I retire today and we see a crash of Bitcoin like we have seen just in the last 8 months, like we have seen in 2021, like we have seen in 2017? How do I prepare for that? How will my expenses change once I retire because I have more time to spend more money? I might take up new hobbies that need more money, but I maybe also save some money because I no longer need to drive to work and do other things that I associate with the working life. All of those questions and many, many more we are answering in this very video. Trey Sellers is, in my humble opinion, one of the best, maybe even the best authority on the topic of retirement and Bitcoin. We talk about the 8% rule. We talk about how you can actually calculate that. He's even showing his own tool where you can put all your inputs yourself in and put your exact individual situation in and see how close you are to full retirement, to half retirement, to financial independence. This is the whole ultimate retirement on Bitcoin episode that I've ever made. The most in-depth video on that topic that you will ever find. Enjoy. I want to dive into the Bitcoin retirement topic on how to retire, how do you think about it, like all of those questions, because I think you're doing a really great job in like diving deep into this whole FIRE topic also. But maybe before just like starting with a more market kind of question, is there a meaningful difference between starting your retirement thoughts in a bear market like we are in right now versus starting in a bull market? Because you have on the one side not less excitement, everyone is like less bullish and everything is like bearish, and like we're thinking about Bitcoin going to zero and all of those things. But the flip side, if you look at it from a logical perspective, that's kind of the perfect way. If you calculate your retirement with the stack that you have right now, you're in a way better shape for a security buffer than if you did it like October last year at like 126,000, because like there could be a 50% drop.
Yeah, it kind of all comes down to your conviction in Bitcoin over the long term and whether you think it's actually going to recover and continue to do what it's been doing for all of these years, which, you know, even in the normal FIRE community is something that I think people, they start their investing journey or their savings journey using index funds and all of that. And you can see the historical performance of the stock market going back 100 plus years. But it's like when you get started yourself and you're putting your actual money at risk and you've got actual skin in the game yourself, now all of a sudden there are these doubts that come into play. It's like, yeah, I know what this says, but what if it doesn't happen this time around? What if it doesn't actually come back? And it's kind of hard to get over that hump. This is one of the reasons that dollar cost averaging is such a great way to invest money as opposed to just having a lump sum and dumping it in, even though statistically speaking, you're most likely better off with lump sum investing. DCA allows you to have this longer period of time that you're putting more capital at work. And it's better from like an emotional standpoint for most people, I think, to be able to weather all of this uncertainty that's creeping in to your psyche, especially early on when you're just starting down a savings journey and building a portfolio that has the end goal of being able to help you retire or pay for things later in life that you need to pay for without having a job that you could lose at any day, AI and all of that stuff, right? The other thing that kind of triggered for me when you're asking this question is, yes, absolutely. Like this is a stacker's paradise where the price just goes down or stays steady, and the capital that you are putting in does much more work than if the price is going up on you every week as your DCA. You can buy less and less Bitcoin. But there is a psychological headwind that people have where it's much easier to put larger amounts of capital in the asset when it's going up and when there's euphoria in the air and everybody's talking about it and how it's going to reach all of these big price targets. When you're stacking in the bear market, it's 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 more difficult from an emotional standpoint or a psychological standpoint to put large amounts of capital in. And this is kind of like this buy when there's blood in the streets type of thing, that so many investors, so many traders have a hard time with, which is that when everybody's fearful, when looks like there's no hope around the corner, that's the best time to be buying these assets, assuming that you've got a positive long-term outlook on things. And the opposite is true. Like when everybody's talking about Bitcoin and it's screaming to new all-time highs, well, you have a higher chance that that's not going to continue, at least in the short term. But it feels better because, hey, if Bitcoin's screaming toward 100,000, well, what's to say it's going to stop there? It's probably very likely going to just go straight to 100 to 200,000, and you're going to very quickly double your money, and then you'll figure out what to do from there. So there's all of this. It's an emotional swirl that people have, especially early on in their journey. And so it's kind of important that you start thinking about what you're going to do and how you think you might feel in these different scenarios, so that when you get into them, you have already gone down that, you've given yourself that psychological analysis and prepared yourself for the emotions that you will inevitably feel. And I've been around this for, I don't know, years and years now, and I've been through multiple cycles. And I don't care how long you've been around Bitcoin, it's impossible not to feel the effect of that euphoria when it's going down, and some of the like hopelessness when it's just been in the doldrums for this long. It's just impossible to do that. You're not human if you don't feel those things. So I don't know if that's directly answering your question, but it's hopefully it kind of paints a picture of how I think about this, and hopefully people can relate to like just this emotional pull that you have during these different market cycles.
It's so logical if you think about it, but it's also emotionally so stupid that we have that thing. And I have it. I think everyone has that emotional thing of group psychology, of the fear of missing out, the social pressure that you go under, because when the price goes down, the negative headlines get more clicks than the positive ones. If the price goes up, the other way around, it's like, and also when the price goes up, everyone that is positive on Bitcoin gets louder. If the price goes down, everyone that gets negative on Bitcoin gets louder.
And they get amplified. Mm-hmm.
And they get amplified at the same time. So there are a lot of effects where if you buy Bitcoin at 100K and it goes up to 110K, you get reinforced and you get that fear of missing out or have to put more money in, and it's like 120K, and like it goes up and like it gets reinforced. Then when it goes down, it actually gets not reinforced. People, like, you see the negative headlines, the critics come out, the negative feedback loop starts, which is exactly the opposite of what you should do.
Yeah.
Like if Bitcoin rips, like now we had like 70, 80K, something like that. If Bitcoin rips till the end of year to 300,000, it might be wise to slow down the DCA. It might be wise to build some emergency fund, build some cash reserves. Even if that's maybe not something popular to say in Bitcoin, but that might actually be a more wise thing to do than YOLO leverage all in. And on the flip side, if we are going down to 40K, maybe the all-in like leverage kind of thing might actually be a more sensible thing. I never argue for leverage. I always think leverage might be a bad idea, but it, like, just from a logical standpoint, the emotional good thing is always the bad thing to do.
Yeah, I mean, you're right. It might be logical, but hindsight is 2020, right? It's very easy to say that looking in arrears, and it's very difficult to actually adhere to that when you're in the moment. I mean, I have done all of these things. I've made all of these mistakes, or if that's what you want to call them. I remember back in, it was like 2022, Bitcoin's pulling off all-time highs. Still feeling very bullish. We're going higher, right? And I borrowed some money. I bought a big chunk of Bitcoin. It was somewhere in the neighborhood of like 45,000, 50,000. And that was because I was feeling really good about it. and continued to ride that all the way down to 15,000, right before we finally went up and made new highs. And now if you look at it and it's like, okay, well, we went to 124 and we're at 80,000 now, so a $45,000 purchase of Bitcoin, a large chunk, like that's a great return, that's a great investment. But like those returns do not happen in a straight line, especially with Bitcoin, and you never know exactly what path it's going to take to get to the ultimate end goal. And I think a lot of people right now are very much confounded as to why things are happening the way that they're happening right now. I'm still extraordinarily bullish on Bitcoin over the long term, but I'd be lying to you if I told you that I understood all of the intricacies or the nuance as to why Bitcoin is trading at 75,000 right now, while the stock market is making all-time highs, where we have all this geopolitical unrest and Iran is taking Bitcoin as payment for passage through the Strait of Hormuz. It's like and debt is hitting 39 going on $40 trillion in the US. It feels like all of the bullish catalysts and things that would push the price higher are in place and have been for a very long time, and we've just been stagnant, and it's very difficult, right? And I think if you're in an echo chamber, or you're like totally isolated from the environment and the people around you who you may have been talking about Bitcoin with and that kind of thing, it's much easier to handle these types of swings. Like, I've got my conviction and I know this and all that, but like you're hitting on it a little bit. There's this like social pressure, whether it's the people who are actually around you, your friends and family, and that kind of thing, or it's just what you're consuming or being fed through the algos on social media or wherever you get your news sources, that just wear you down. They wear you down during these deep bear markets. So I'm saying all this to just say, like, we're all in the same boat here. Like, I can relate to the way that people who are maybe newer to Bitcoin, who just started stacking when during that last euphoric phase above 100,000, that we spent a good amount of time there, right? During this kind of distribution, in hindsight, distribution phase that we went through before this larger pullback. And you're probably feeling a little bit insecure about the decisions that you've made. And it's like, oh yeah, Bitcoin is better money. It's got this massive total addressable market for store of value asset, and it's much more superior to gold and to bonds and to real estate for all of the reasons that we all understand. Well, why isn't the market valuing it for all of those things in the here and now? And sometimes that timeline that you expect things to happen, the compressed view that we have on the short term, is really hard to look past to see where things are in 10 years. And 10 years is really not all that long of time, right? It's like over a 10-year period, a lot can change and a lot can happen. But like, I'm secure in the kind of reality of the situation, which is that over the long term, what needs to be true for Bitcoin to be successful? They got to keep printing money. Bitcoin needs to maintain 21 million hard cap, and we need to continue on in a digital world as opposed to going to a totally analog world. Like, I'm pretty confident in those three pillars of a thesis, and I don't really see any reason that any of those would be upset in any time ever, really. So if that's the case, you kind of just have to put your blinders on and let those things play out, and try not to get swept up and caught up in the what feel like macro movements, because we're looking at it on a compressed time frame, but are actually just micro movements in that overall trend.
Yeah, I mean, we are, what, 8 months, 9 months from the last all-time high away. It's not that
long ago. It really isn't. Yeah.
And I maybe one more point before we start with the actual retirement topic. I think it's especially hard for Bitcoiners, because most Bitcoiners, as maybe you and me also, are pretty alone when it comes to their direct friends and relatives. Now, obviously with my podcast and me working in Bitcoin, that has changed a bit in the last 1-2 years, where a lot of my friends actually are Bitcoiners that got to be my friends over time. But I remember just 2 years ago, 3 years ago, it was just me. There was like one cousin, one uncle that got it a little bit, and then like 100 other relatives, or family members or friends that like had no clue about it, maybe had even some exposure, but they didn't care about it. They were not real Bitcoiners. And so I think we shouldn't forget that there's a very lonely component still in 2026, which is crazy, component to being in Bitcoin.
Yeah. Yeah, you're right. I mean, it's feast or famine, right?
What is
When
that?
well, when the price is ripping, you're like the most popular guy at the party when you're a Bitcoiner, right? And and the people who have known you've been around Bitcoin for a long time are asking you about it, and they've started buying a little bit. Like everybody that I know, for the most part, has some amount of Bitcoin, right? It's typically very small. It's not really material, but they got some amount that they probably started buying in the last year, 2 years, when the price was going up every day. Um, and then the famine part comes when the price is in the doldrums. They feel like they're underwater, and you know, it just is what it is when it comes to these kind of short term cycles. You said let's get into the retirement stuff. Like I feel like this is a very important part of that retirement conversation, right? Like people who are using Bitcoin as a savings vehicle, they're all feeling these same types of emotions, especially if you're early in your journey and especially if you're late in your journey. Like if you are close to retirement and Bitcoin is doing what it's been doing, you might be starting to think, well, what if this lasts for a very long time and I'm selling down my Bitcoin or I'm borrowing against it to fund my lifestyle and this just doldrums continues on? What is that actually going to do for the long-term nature of this retirement that I'm trying to fund? And the basis of the FIRE methodology, of retirement planning, generally speaking, is that you own assets that continue to compound and go up over time. And if that doesn't happen, or you start to have doubts about whether or not that happens, then uh, then it raises questions as to the efficacy of the retirement plan that you've built. So I think it is relevant that people are feeling very uncertain at this point in time. For in so some people are feeling some amount of uncertainty about like what the next 5 years looks like, or what the next year or 2 years looks like, and it is relevant to this question about retirement.
Now, how do you think about, like, how do you begin a retirement conversation even? Because there's so many nuances to that question. How do you even start to think about where to start with Bitcoin retirement?
Well, just retirement in general, and the concept of like financial freedom or being able to operate without a paycheck starts with the lifestyle that you either are living now that you want to continue, or the lifestyle that you want to build. Because if you think about like during your working life, you've got all these expenses that you're funding, and the funding of those expenses is coming from income that you've got from a job, right? You're trading your time for money, or you're building a business that creates cash flows of some kind. And you're building a lifestyle that is funded by some inflow of capital. And in order to replace that flow of capital, in order to retire, which means not or become financially independent such that you don't have to rely on that paycheck, because you're going to step away and start doing other things that you find more enjoyment for, or you've just kind of run out the life of your career. It's time to think about the next stage. Well, whatever you're using to replace that money that's coming in from your job needs to needs to know what it's covering in order to replace it. Meaning it all starts from the expense side of this P&L or this cash flow statement, if you will. So if you have a good understanding of what you need to cover in terms of your lifestyle, then you can start to design a plan around where you need to get to for your balance sheet to take over as the funding mechanism for your life relative to your income statement or the revenues that are coming from your job. So it all starts from there. What do you want your lifestyle to look like after you've started working? Is that just a continuation of your current lifestyle? Like, hey, I'm pretty happy with like the house I live in and the travel that I get to do and the um, you know, places that I'm eating out. Like, I don't need to have a jet. I don't need to have like a second home, or maybe I do want to have a second home and I want to build that into my lifestyle that I want to plan for. Great. Like when you take inventory of what that lifestyle is going to look like, what your in goal lifestyle is going to look like, then you've got like the first piece of understanding what you need to build in order to fund that. So that's where things start. It starts with your expenses. It starts with what do you want your life to look like? When you define that, then you can take the next step of, okay, how do I build a portfolio and a mechanism or a plan that will help me to achieve that lifestyle when I've stopped working?
Interesting. I never thought about that, but while you were explaining and thinking about, okay, I have a job now that takes 30, 40, 50 hours of my week away, and I want to retire from that. If you retire from that, your lifestyle will be different. Like 100, like there will, something will change. And so you have basically 30, 40, 50 more hours per week that you can potentially spend more money on.
Potentially.
Potentially you pick up a new hobby. That new hobby potentially costs more money. You might also save money because maybe you cook at home instead of eating out at lunch. Like maybe you don't need to drive as much with the car to work, and like there are of course those cost benefits to like no longer having a job, potentially. But there, overall, I would think people might find new things they can spend money on directly or indirectly. So this is also, I thought about that. Like even like you have a current expense rate, whatever it is, 2,000, 3,000, 5,000 a month, that might actually increase just because you have 40, 50 more hours time to do whatever you want to do, which might cost more money. No matter if you already have self-custody or still have your Bitcoin on exchange, your generational wealth that you have in Bitcoin could be completely at risk. And that's why I highly recommend to you to give the Bitcoin Way a 30-minute free consultation call to check how secure your custody setup really is and what you can still improve. So head over to thebitcoinway.com/Robin. Again, that's the bitcoinway.com/Robin and get your free initial 30-minute call with the Bitcoin Way. Finally, we have BTC Prague back in 2026, and this year I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code ROBIN to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi.
Yeah, you're right. What are you going to do with that time? I think people do have this picturesque vision of what retirement looks like, but they haven't necessarily thought about it on a day-to-day basis, how are you going to spend your time? And what is that going to cost? You're right that there are some expenses that will go away when you stop working. Maybe you don't need a second car if you've stopped working, right? Perhaps you can get rid of a car. You don't need a second car. That's great. Like you're getting rid of an expense, you're getting rid of the driving. Maybe you definitely do need to keep that. And maybe you're also adding on a golf membership because you're going to play golf every day because that's the thing that you want to do on the weekends that you don't have time to do during the week because you're working. And so now you've got to add $500 a month or $1,000 a month or something to the expense profile that you're going to have in retirement that you need to start planning for. And so I think this exercise of like really thinking about what you want to do with your life after you retire or after you step away from the current path that is funding your lifestyle and move into a different direction, it's a really good exercise to do. And you can, you can think about what those expenses are in multiple different ways. And people, like I said, if there's like just a kind of a easy momentum of saying, okay, well, my current lifestyle is this, it's not really going to change. Yeah, I'm going to have 30, 40, 50 hours uh, extra a week to read and do crafts around the house, do some, yard work and build things or whatever. It's like, you're probably not going to really add all that much expense. But if you're going to be going from a week or 2 weeks of travel every year to traveling for a good portion of the year, well, perhaps that adds a different expense burden. So that exercise of helping to understand what that looks like is going to be helpful for you to figure out exactly what the target is that you're going for.
Really interesting, the expense side of it. Another question, just for me to put in there, not to forget it, because I might forget it otherwise. How do you have any of your retirement thoughts changed since Strategy came out with Stretch and Strive came out with Seyr, as they provide income and potentially bring more stability into a retirement thought?
Maybe around the margin, but only to the extent that. So here's how I think about this. Typically speaking, I do not advocate for investing for income. I'd rather invest for total returns. I'd rather have more wealth over the long term, even if that comes with more volatility that I can draw from, because it allows me to do more things, right? If my wealth is compounding at 25% per year over the next 20 years because I own Bitcoin, and you can debate what that actual compound annual growth rate is going to look like. I tend to think 25% might actually turn out to be conservative, even though we're going through this period where it's feels like feels like that's aggressive. But if you talk to the power law guys, by the way, they'll say, "Oh, 25%. That's way too aggressive. The power law has diminishing returns." Yeah. Okay, great. Fine. Believe the power law. But by the way, the power law says that Bitcoin's going to grow at like 34% over the next few years, and then it's going to drop down below 25% like 15 or 20 years from now. So actually, I'm much more conservative when I say 25% than they are, but that's a little bit of an aside. I'm just poking a little bit. When it comes to a comparison there of 25% versus 11.5% that you get, or 13% that you get from SEDA or from STRC, which might be a little bit higher when you adjust for the taxes, it still doesn't actually compare. So you get this, you get this like even returns, but you're giving up total wealth over the longer term. And I would prefer to have more total wealth. I think a better comparison is like, okay, if my view of the way that I want to build my portfolio is that I want stock exposure and Bitcoin exposure in that long term piece of it, well, maybe some portion of the stock exposure should go to something like an STRC or a SEDA, because that's a more comparable type of an asset. And it's like, now if my expectation of returns in the stock market is 10% per year with all the volatility that comes with it, or I could get 11.5% per year with no volatility or very little, then now all of a sudden it makes a lot more sense to be putting some portion of that stock sleeve into something like SGRC. I hope this is making sense. But I just don't see them as like really comparable assets. And I tend to want to focus on building wealth compounded at a much higher rate, even if it comes with the extra volatility that is there. And then people will bring this back to, yes, but we need income in retirement. We need to have this. So this is a good way there you can kind of use Bitcoin to fund your retirement. And what I would say to that is, but you can create income through the portfolio by selling it down. And this is the way that or borrowing against it, if that's your thing. But this is the way that the traditional FIRE approach goes about things, right? Is that you build up this portfolio. It's big enough such that you're pulling 4%, or maybe a little bit higher if you own Bitcoin as part of that. And even in the absolute worst years and with the worst sequences, you've got an extraordinarily low chance of ever running out of money. And in fact, most of the time, you're going to end up with far more than you need, even if you are actually selling that down over the period and not doing some of these more sophisticated financial tooling where you're borrowing against it and buying other assets and doing all this kind of thing. It's a very simple approach, but it works. And it in my mind, it optimizes for a mix of simplicity and maximum total wealth over the lifetime of your retirement, and then on into the future when you're passing down your wealth to your family.
Yeah, it's scary to be in Bitcoin, but it rewards you, because if I mean, it's hard to imagine the exponential growth of reinvesting 11.5% versus getting 25, 30, 20%, whatever it is. It's not a 2x difference in the end. It's like a 100x, 10x difference depending on the duration of it. It's a multiple of it better than the underlying it, because it's just like it compounds and it really grows hard. So like it's not a little bit better.
And Robin, let's not forget here that the success of Stretch and SEDA depends entirely on the success of Bitcoin going up over time. Like Bitcoin needs to go up at 25% plus per year over the foreseeable future in order for Stretch and SEDA to actually be successful and be able to, continue to return all that. Now, I know some people will say is like, oh yeah, but they've already got it so over collateralized they could go a long time selling down Bitcoin. Okay, fine. Like that's great. But again, the success of this whole ecosystem does depend on Bitcoin being successful in terms of its price appreciation over the long term. So it's not like these are totally uncorrelated assets in some way, shape, or form.
Do you reject them completely in the portfolio, or you see some kind of other role they could play, maybe in emergency funds, maybe operating cash or something like that, for like medium-term capital that you don't want to have in a more volatile asset?
Yeah, I like it for the idea of an emergency fund. I've written a little bit about emergency funds and think it's a totally overblown concept that people don't need to really be thinking about, to be perfectly honest. Like, you should have all of your money invested at all times. And then if there's an emergency, you've now got a bigger pool of assets that you can draw from to cover that emergency. But if you are going to have some kind of quote unquote emergency fund, I think this is a really good option for it, right? Because it should be relatively stable. It is providing comparable returns to the stock market, and you can sell it down whenever you need to in order to fund those assets. What you definitely don't want to do with an emergency fund is just sit on $50,000 worth of cash that's paying you 0.01%. Like, what are you doing here? This is totally and completely an emotional crutch type of question, as opposed to like thinking rationally about how you're allocating the capital that you've got. I also think there's like, I've done this kind of carry trade that I still have on with STRC, where I borrowed from my HELOC, and I didn't do the entire amount of the HELOC. Like, I haven't maxed that out. It was kind of an experiment at first. The bank that I've got my HELOC from came to us and said, we're giving you a promotional rate of 5%. And I was like, great, I'm going to take that 5% promotional rate, and I'm going to draw from the HELOC, and I'm going to buy STRC, and I'm going to make a spread of like 5-6%. And then I'm going to take all of the dividends that are coming from that, or that return of capital, and I'm going to buy Bitcoin with it. And then, assuming that this all works out, I can close the trade at any time. I'll sell the STRC at par and pay off the HELOC, and I'll walk away with kind of some free Bitcoin. So far, that's been working. So even after that promotional rate expired, I still have kept this trade on because I continue to be bullish on STRC and the structure that is there, and the conviction or the commitment that the strategy team has to ensuring that that dividend continues to pay out. They've kind of put STRC on a pedal. If you haven't noticed that, like, that's what they're selling to the market. That is what kind of their primary focus is like making sure that STRC is functioning properly, and that they're maximizing their BTC per share, but using that as a primary funding mechanism for their Bitcoin purchases going forward. And so I've developed some good conviction that STRC will continue to perform the way that it has, and while the yield that it's paying is at 11.5% versus 7% or whatever I'm paying right now, that's still a pretty good carry trade. It's still a pretty good spread of free money. What I don't typically do, though, is take new money that's come in and then just directly buy STRC. I'd rather just buy the Bitcoin. So this is purely a mechanical arbitrage type play, as opposed to something that is a primary savings mechanism, if that makes sense.
How do you think about that? Sounds like running a business, but I don't find a better term for that. How do you think about operating cash? Like, because we haven't figured out the Bitcoin world. Like, rarely I can directly spend Bitcoin. I mean, there's ways of directly spending Bitcoin, but you still have the volatility. So I personally operate under having around, currently it's a little bit more because I'm moving soon. But usually I want to have like 2 to 3 months of operating cash, just like in literally cold hard cash. And I just experimented with having a very tiny amount of that in small amount of that in Stretch, because I was like, okay, I still want to have it liquid and not being dependent on the volatility of Bitcoin, but like making 0.3%, which I get from the bank, is not that good, and getting 11%, even like I have to pay taxes. I cannot do the deferred tax thing in Austria, unfortunately. So for me, it's like 8% or something like that, which is still like 80%, 80 times better than the banks. And so how do you think about operating cash in general, just like living on Bitcoin retirement, and then maybe also like tie in a little bit Stretch, if that's an interesting strategy for operating cash?
Yeah, I think for like that near-term money that you know that you're needing, you're saving up for a particular, you're putting cash aside for a particular purchase that you know is upcoming. Is that makes a lot of sense to me. So for this moving expense or whatever, that makes a lot of sense to me. As long as you can feel pretty confident that it's going to be around where you bought it, at the time that you need to sell it, you're not going to take too much of a capital loss or something like that. Which even if that's the case, it still may be worth it, right? Because you still may come out ahead, even if you take a small capital loss when you sell it, because the dividends that you're getting are pretty high, right? And so that can make up for, some of the capital loss that you would get, or that you might be exposed to. In terms of like operating cash, I tend to view this purely as a mechanism for just making my life easier. That if I'm 100% Bitcoin and I have zero cash when it comes time to pay the bills, which are coming out randomly throughout the month, then I've got to sell Bitcoin to pay it. I've got to use like some of the bill pay stuff like Strike has, which is really cool. And I use that for my newsletter business, but my newsletter business has a whole lot less transaction frequency actually than my than my personal balance sheet does, or my personal finances. And so now all of a sudden I've got to account for all of the little tiny movements and all of that. Like, you're right. We're just kind of not in the world where the majority of people either accept Bitcoin or that the tax code is friendly enough to be able to handle that. And so for just simply ease of use, I will keep a small amount of cash in my bank account that's earning nothing. But it's strictly to like just grease the wheels of paying my bills. Anything over and above that, I want it to be working for me, right? I want it to be building toward that financial independence that I'm working toward. And I'm okay dealing with, like, volatility is not the problem for me in that calculus, I guess is what I'm getting at. The volatility of the Bitcoin price is not the problem for me, because I on average, it goes up every day, right? So yeah, there may be volatility to the downside. Well, then you can claim a little bit of a capital loss, but a lot of times you're going to have volatility to the upside and you're going to have a gain. Those things are going to kind of offset to the point where you have a net gain over a long period of time. I'm just not too worried about that issue. It's more just about, like, how do I make my life a little bit easier when I'm dealing with the bills that I need to pay? That's it.
Now, we've talked about the emotional state. We talked about the first thing that is very important, getting a feeling for your expenses that you will have, not only right now, but after you retired, and talking about that. We talked about emergency funds and operating cash. And I think now the most important question we kind of left now for the end, or like for the middle of the podcast, is, okay, you know that you have a certain amount of expenses per month. Let's say it's 5K to make a round kind of realistic number per month to cover all your expenses, life savings, and all of that. Maybe even with a little bit of a buffer built into that. Because maybe with inflation, maybe there's something that is coming up. It's also sometimes you have one-time expenses that you kind of have to bake into your monthly run rate, because your monthly run rate might has rent and car payments and whatever in there. But maybe you have a one-time payment of needing a new laptop, or your roof breaks down, like whatever one-time payment you have. If you have that one number that you need, how do you think about looking at your assets, looking at your situations, to getting to a point of actually being able to retire, if, let's say, 5K is the number that you need per month? With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups, because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. decentralized. And by the way, you get KYC free Bitcoin. That's why I use simple mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together.
Yeah, so I think a really good starting point is the 4% rule, which is the traditional FIRE approach of saying, I've got X expenses. If you spend $100,000 per year, then you divide that number by 4% and you get to a target for what you need to get your portfolio to. So if it's $100,000, then it's $2.5 million worth of a savings portfolio being drawn down annually at 4%, and inflation adjusted as well. So you don't have to worry about inflation. That 4% rule kind of already takes care of that. And if your expenses are half of that, then you need half of that, right? 1.25 million. If it's double that, then you need double that. You need 5 million if you're spending $200,000 per year. And so, this is very conservative, especially for Bitcoiners. It's built off of historical stock and bond market returns, which on kind of a nominal basis of a 50-50 stock and bond portfolio is going to give you like a 7 to 8% return. If you're just in stocks, it's going to be like a nominal 10% return, or that's what it's been historically going back, decades and decades. Actually, in the recent past, it's been higher than that. It's been more like in the 12 to 14% range on an annual basis. So who knows if that will continue. But that 4% withdrawal relative to a 10% return, if you're 100% in stocks, has plenty of buffer for inflation, volatility, and kind of the unexpected areas of life. If none of those unexpected things happened, if it was a perfectly straight or linear, smooth cadence on all this, then you'd have 6% in growth every single year if you're making 10% and withdrawing 4%. Of course, that's not how things play out, right? So that extra buffer accounts for sequence of withdrawal risk, and the volatility that comes with the markets, and it accounts for the extra expenses that you might have on a year-to-year basis and that kind of thing. If you are saving in Bitcoin, and Bitcoin can be at least double the return rate than the stock market, let's say 20%. Well, then the question is, does that mean that you could actually double the withdrawal rate that you might have for Bitcoin? And I think the answer is yes, that a 20% compound annual growth rate for the foreseeable future is conservative, actually. If we think it's at 25%, now all of a sudden an 8% withdrawal rate on the Bitcoin portion of your portfolio is very, very conservative. And most people don't own 100% stocks and they don't own 100% Bitcoin. There's some blend there. So what you can do is you can apply the 4% rule to the stock portion, and you can apply the 8% rule to the Bitcoin portion and come up with like this blended withdrawal rate. So if you are 50-50 stocks in Bitcoin and you apply 4% to stocks, 8% to Bitcoin, you're going to come out around 6% of a blended withdrawal rate from that portfolio. And now we can take this one step further, actually, and say, now you're thinking about those withdrawals at a 6% withdrawal rate. You're thinking about those withdrawals in a proportional perspective. Like if I've got $100,000 a year in expenses, I'm going to draw down, 4%, $50,000 of that coming from the stock side and $50,000 of that coming from the Bitcoin side. But then the question is like, why would I sell any of the Bitcoin early on in my retirement? Why don't I sell down my stock portfolio before I even touch the Bitcoin? And if you're doing that, then you're giving the Bitcoin even longer runway to compound for the entirety of it, which actually would, I haven't done the calculation on this, but that would drive that blended withdrawal rate up slightly, because you are able to actually give, maybe it's just a 5-year buffer or something at the beginning of the retirement before you start touching the Bitcoin. Well, an extra 5 years of Bitcoin compounding at 25% all of a sudden balloons the portfolio much greater than it otherwise would be if you're selling it down proportionally. So there's a lot of nuance to that particular question, but I think the simplified version is 4% rule for any of the stocks you own, 8% rule for Bitcoin, come up with a blended number, and that is the target that you need to get to. That's what you need to be focused on. And it's just a guidepost. Doesn't have to be the exact dollar amount, but it should give you a really good thing to point at, to say, okay, I've got enough. Now I can start to pull back. I can start to, I don't need to save anymore. I can start to spend the money if I decided I'm going to keep working. You literally don't have to send any more money to savings. You could spend every last cent of it, buy those things early on before you actually retire. That might be big expenses that you want to buy, a new car or whatever it is. And it's not at all going to affect the long-term nature of your retirement or your financial independence. So this is kind of how I think about this. By the way, I've got a lot of this functionality built into a free tool that I have at calc.firebtc.io. It's called the FireBTC Compass. And you can put in your expenses. You can do that all in one lump sum number of annual expenses, or you can take a granular itemized approach and build up your expenses from all the things that you can that you want to add to it. And then it will do the calculation of your allocation between stocks and Bitcoin, and it will give you a 4% withdrawal rate on the stocks and 8% on the Bitcoin. You can adjust those numbers if you would like to. And then it also has the ability for you to adjust the compound annual growth rate that you would expect for stocks, the inflation number that you would expect for for the economy or your expenses over time. And you can actually even flip it into power law mode. I know there's a lot of power law fans out there. You can flip that into power law mode as well for the CAGR on Bitcoin. So lots of cool functionality there that can help you just get an idea of what these numbers might look like for yourself, and use it to track over time. You can kind of add data points every time you're updating your finances and watch the historical chart fill out, so you can track this over time. I see you're showing me.
Is that the correct website?
Is it the correct what?
Is that the correct one that I found here?
Yeah, absolutely. That's it. So it starts with no data in there. If you hit that update my finances button, it's going to bring you to this tab. And here's where you can either just input a number in there as like your total number, or if you go to detail mode, you can start to add line items in there. There's actually a line item for a buffer that you were talking about, and you can change what that buffer might be. There's a line item in there for capital gains as well, because if you think about it, when you sell your assets later in life, if you're selling them down, there's some type of capital gains tax associated with that. And so you can just plan for that as being an extra expense that you're going to have to pay on an ongoing basis as well. And so if you input all of those things in there, it'll add it up to that annual expense number.
Interesting. I love it. I've never seen that. We could start with the 5K that I said before. What is it? I think 60K would edit. Do I have to edit here?
Yeah. So go back. There you go.
Oh,
just put it in there.
Yeah, 5K a month. With 5K a month, you probably need like 1 million, 1.5 million or something like that.
So this is the amount of Bitcoin that you have, right? So let's say you've got 10 Bitcoin. Great. Stocks and other holdings. And this I think about as liquid holdings, right? Like this is things that you actually can sell to fund your lifestyle. A lot of people own real estate, or they've got equity in their home, right? If you've got $500,000 of equity in your home, that's great. Looks good on paper. You can't actually use that money to pay for your lifestyle. You've either got to borrow against your home in order to access that equity, or you've got to sell it and downsize. So I tend to not count it. And so here you can see
Interesting.
just a different breakout of, okay, here's my annual expenses. Here's my target if you're looking at just the traditional 4% rule. Here's my portfolio value relative to that. And then BTC holdings, your adjusted FIRE target. So this is saying, hey, with the amount of Bitcoin that you own, you actually don't have to save as much, right? Because there's a higher compound annual growth rate attributed to Bitcoin. And then these labels over here on this heat map or this thermometer are based on an article that I wrote called the 9 levels of FIRE.
Interesting. So you even have a time to fire. So like a time, like how long it will take you to get to the traditional fire space. It will be then the full fire, like the 7.
That's right.
Level 7
That's
here.
right. Yep, that's right. So that orange bar that's over there, you've reached that when you think about the Bitcoin adjusted. Some people want to just think about this as, okay, I'm going to be even more conservative. I'm not going to assume an 8% withdrawal rate for Bitcoin. I'm just going to assume the standard 4%. That's that traditional number that you'd be thinking about.
Interesting. And then it updates also this thing, and you come then closer to the actual number.
That's right. That's right. And then if you scroll down, now there's only one data point here, so you can't really see how this fills out. But over time, if you come in tomorrow and you update your numbers, or you come in next week or next month and you save that snapshot, this chart will start to fill out, and it will show you like lines of where your portfolio is, where the different targets are, and you can see what those snapshots are. So you can kind of flip between like what the multiple looks like and the percentage that you are to your goal and all this kind of thing. So yeah, it's
That's
a
fun.
useful tool for kind of seeing what you need to achieve and tracking it over time.
I love
Now
it. Thank you so much for sharing this.
here's one other thing that's really interesting. Go to the projections tab there. By the way, I've not been able to spend as much time on this as I would like to build out a lot of the features. I probably should spend more time on it than I have. But it will over time get a lot more robust. So this is what I call the bear market stress test. And what it does is it takes all of your information and it stress tests it against 2 historical bear market cycles to say the question that we're trying to answer here is, if you retired tomorrow when Bitcoin is at $75,000, and at that point in time was the start of another bear market drawdown that matched what was in those previous 2 cycles, would your portfolio survive over a 30-year time horizon? And if you go in and you change your finances, you'll see you bring them much lower, right? Like you don't have enough saved, this thing will drop to 0. Like make your Bitcoin holdings 1 or something. Just yeah, that might work. Yeah, that's probably enough. Yeah. Like you've got $275,000 saved. Okay, go to projections. So if you retire tomorrow, your portfolio will be depleted 6 years later. The only way to not have it depleted is that max safe withdrawal of 2,800, but your expenses are much higher than that, right? That you've put in there.
I think the expenses are like 5K a month that I
Your
put in there.
expenses are 5K a month. So in order to not deplete the portfolio, you would need to spend $2,800 or less. By the way,
That's a real cool
I know
thing.
you're in Europe and you probably use euros. If you go to settings, go to preferences, you can change the currency there as well. You can display everything in sats if you'd like, and then you can back it up as well. So this is an important distinction here with the way a lot of these tooling works, is that all of the calculation, all of the data storage is all happening in the browser. Nothing goes to some server somewhere. It's all happening in that browser, which is great from a privacy perspective, but it also does, create the potential for you to lose that data if something happens to that browser cache. And so that's why I have this like export import functionality, so that it will take all of that snapshot history and allow you to back it up every once in a while, just in case something were to happen there. You can always just import it back into the browser.
Yeah, if you, I don't know, delete the cookies of the browser, you probably lose all the
You
data.
lose all of that. That's right. That's right. And then if you go to the assumptions tab, settings assumptions. So here is where you can play with the compound annual growth rates. You can change it into power law mode. You can change the stock growth rate, inflation rate, and you can play with your withdrawal rates as well.
I love that. That's such a cool tool, because this is really, it shows you, like it lets you put all your individual things in there without being like, oh shit, like where's my data going? And you can adjust all the individual assumptions, because some might say, I think Bitcoin is growing only with 20%. I think Bitcoin is growing with 35%. I mean, with retiring, I would always encourage people to be extra conservative than to like, it's better for you to have way more money than you thought you would have than way less money than you thought you would have, and run out of your savings. I guess that's a better way to do it. But yeah, that's I couldn't even think about a single thing that's kind of missing here.
Oh, there's a lot that's missing. There's a lot that I have in the backlog to add. I think a lot of people want to see kind of more of like a total balance sheet perspective here. Like, as I was saying, stocks and other liquid assets are things that you can actually sell down to fund your lifestyle. But people do want to see like more of a total picture of their net worth and include their home equity and that kind of thing, which is like, it's like wealth that they could tap if they wanted to go through some extra steps to do so. That does add an expense if you're going to do that. So maybe we could model out what that would look like, right? If you've got $500,000 in equity or $200,000 in equity and you borrow against that, well, what is that going to do to your expenses? We can make a few assumptions, and then, you're going to invest that money. So then that adds to the asset side and the compounding that you've got. What does your picture look like? So this is something that might fit on that projections tab. There's a lot around income as well. Like, this is assuming that you've got a portfolio of stocks and Bitcoin that you're selling down over time. And that's the 100% sole way that you have any income coming in. Well, that's not necessarily the way that life works. In the US, we have Social Security. A lot of other countries have pensions. They may be small or fairly immaterial amounts, but it's something that's adding to your income. And if you incorporate that income into the total picture here, you're actually lowering the target portfolio amount that you need to save, because you no longer have to sell as much down in order to cover those expenses. Same thing for, like, a lot of people own real estate and they've got a real estate portfolio and they don't want to sell it for Bitcoin or stocks. They're fine with the illiquidity and all that. And they've got this income coming in. So there's a whole lot that could be built into this that I will get to over time. If anybody's listening and watching and is experimenting with the tool, please feel free to, there's a spot down at the bottom of that page that says, reach out for any feedback that you've got. Please send me what you got. I'm happy to put it into the backlog and get to it when I can.
Really cool. It's also answered my question of like bear market start versus bull market start, because here you can go ahead and see what would a bear market starting right now do to my holdings, and would it fit that? Which I think, especially in Bitcoin, we kind of have to do that probably for the next 10 years still, 5 years still. I want to get to one more topic. You hinted at it, I think 2-3 times. I feel like you're not a fan of the power law. Why is that?
It's not that I'm not a fan of the power law. I'm definitely not a fanboy of the power law. I think it's an interesting way to put some kind of non-arbitrary projections out there, but it is based on the history. And I'm not convinced that the power law is some type of natural force that is just playing out like it's some law of nature. It's not physics, right? I'm also kind of irked, and maybe somebody who's listening can correct me here if I'm wrong. I'm irked when people say, "Oh, well, Bitcoin can't follow an exponential path. It always has to have these diminishing returns." The stock market has exponential paths because, it's growing at 10% per year for forever, basically. And that's because of the fiat financial system and like all of these, the credit that's built in, and it's got earnings and all these things. And I haven't been able to wrap my head around that argument. Bitcoin exists and is denominated in the exact same political currency units as the stock market is. And so even if you think that the compound annual growth rate for Bitcoin is going to settle at a much lower rate than it has historically speaking, at the very least, like if the money supply is growing at an exponential rate and you're denominating the Bitcoin price in that money or in that denomination, then it must grow at least that amount, right? And there's I just haven't been able to square around why that would break down when we're talking about the same denominations here. So there's just a few things that that bother me about it. I think all your models will be destroyed is a very good way to think about things. Like this idea, all models are wrong and some are useful. I think that applies to the power law as well. It's really cool, and it's I like a lot of the research there, but I just like I refuse to allow myself to come up with something or follow something in a type of religious way that I can't square some of these issues with. So some people are probably watching this and thinking, "Oh, well, you just haven't done the research, all that." I actually have written something in the newsletter about the power law and gone through these arguments here. But I'm happy to be proven wrong. I hope they're right. I hope it goes up forever in the way that they describe, and that you can use the power law floor to just know that it's never going to go below there for any extended period of time. I just don't think that's how the world works. And so we'll see. We'll see.
All
But that's all I
models,
got on that.
yeah, all models are correct until they're broken, I guess.
Exactly. And that's the reason that I put it in the dashboard or in the compass tool, is that I know a lot of people do like take the power law very seriously, and I think the concept of diminishing returns, at least over the foreseeable future, is a valid one. That is what we've seen so far, right? And so instead of just saying, okay, well, we're going to have diminishing returns, and I'm just going to put my finger in the air, X, it's going to be this 5 years from now and this 10 years from now or whatever. Like, I have no good methodology for coming up with what that might look like. But the power law at least brings that out of complete arbitrariness and looks at historical data to project forward. I think that's a valid way to look at things. I just don't think of it as like some type of actual law of nature that will continue based off of all of the arguments that have been put forward for it. So happy to be proven wrong, but I can't get there yet.
If it tells me a lot actually about you, like a lot of positive things about you. If you don't believe in it, but you acknowledge the place it has in the Bitcoin community that you still put it in your own tool. It's really cool to see people
Well, I
having
could
an
have put
open mind.
stock to flow in there too, but I think it's pretty. I don't
But
know.
that's
The
broken,
community
right?
has reached consensus that that model was broken, right?
Yeah, but that's very obviously like, but that's just very obviously
In
broken. I
hindsight,
feel like.
right? We could fast forward 5 years from now, and the power law broke to the upside or the downside, and we look back and be like, oh yeah, well that was obvious, and same kind of thing. So at that point, I'll strip it out of the tool and make sure there's no record of all this. I'll need you to scrub the video and us talking about that fact that it ever existed. No, I'm just kidding.
We cannot be wrong.
I'm wrong all the time. If you're pretending otherwise, what are you doing? You're just fooling yourself, right? So
It's so funny because I'm 27 years old and I've been wrong already so many times. And so
trust me,
I could feel
I'm 41. You got a whole lot more wrongness ahead of you.
We have an end routine in the podcast, as you might know from previous experiences, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And he asked a two-part question. The first part of the question is, if you could travel 300 years in the future, what do you think would surprise you the most?
300 years in the future, what would surprise me the most? Well, 300 years in the future. Okay. I think there's a lot of optimism and expectancy that like Elon is going to be able to solve this, get off the planet Earth and establish some kind of like lunar or Martian colony or something like that. 300 years in the future, I'll be surprised if that's actually happened. I'll be surprised if that's actually happened. I think that the physical limitations around all of that, in my very not expert opinion, are way greater than we think they are, and still extraordinarily difficult to overcome in a way where we would have people actually living on Mars or on the moon. Now, that's not to say that we might not be able to have some type of extraction coming from those things. Like maybe there's some great resources on those bodies that we'd be able to pull back to Earth in some way, shape, or form. But getting off of Earth and moving to one of those two places, just I don't think that happens in 300 years from now. Well, that was really, I don't know. I can't come up with anything else. Was that good?
I don't have an answer to those questions. Like, it's super hard for me to think
Don't
about
either.
that. But Earth is an amazing place to live. That's for sure. And it's, I mean, I guess that would surprise me. Like, if in 300 years we found a better planet to live on than Earth, that would definitely surprise me. But I
Yeah.
don't think it's realistic. But yeah, like that would 100% surprise me a lot if we find a planet that's just more livable and better suited for humans, and maybe there already are other humans. Then
Well, we can't get there to any of these planets that might already exist. So then you have to like build one essentially, and man, that just seems unfathomable to me.
But yeah, that's 300 years. The second part of the question is a really interesting one, and I think it's even harder to answer.
No.
If someone from that time would travel back to our time, what do you think would surprise them the most?
Oh, um, I think they would be surprised by just how primitive the governance structures that we have in place actually are. That they are absolutely built for the dark ages, and do not at all apply to like the technological foundation that we all live in on a day-to-day basis. Like democracy and like the state apparatus as it exists is just so antiquated and counterproductive and ridiculous. And I would hope that 300 years from now, we've gotten past all of this craziness with the way that we approach some elite group of people managing the minute details of millions and billions of people's lives around the globe, and have moved much further down the path of individual freedom and autonomy and cooperative manifestations of working together in society, as opposed to that which is based on force and violence. I would hope that 300 years go by and that person in the future is looking back at the past and being like, the same way that we look back 300 years and like, how did they live like that? Right. So anyway, that's maybe a hopeful thought to end on.
I love that. Really cool. Ione Appelberg has amazing questions. It's a very deep one. Made me think about the future. Really cool. Thank you so much, Trey, for being on the podcast, being such a gracious guest and bringing so much value with the calculator and all your insights to the podcast. Before I let you go, where can people find you, the things that you're doing, and get some updates?
Yeah, thanks, Robin. I really appreciate you having me again, and hopefully we can do it again soon. You can find me on X at @TS_HODL. My day job is that I work at Unchained on the sales team. So go check out unchained.com. We have a retirement account calculator that's there as well, and Bitcoin IRAs, which are definitely a good tool that you should consider. I have a personal website, treysellers.com, and I've just started building out a YouTube channel. So you can go check that out as well. Just search for my name. It should come up. And then the newsletter is kind of the foundation of all of the FireBTC stuff, which is firebtc.io. And don't forget to check out that calculator when you get a chance.
Awesome. Thank you so much, Trey, for being on the podcast. Also, thank you so much for everyone and for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.